Good day, students. Once again, in this question, I will be doing the derecognition of the damaged asset or of the damaged component of the main asset. And obviously, it will not be limited to this, but also the calculation of the depreciation, the calculation of the carrying amount of the components of this asset, and the testing of the impairment loss and the calculation of the impairment loss, the recognition of the new component that has been acquired or that has been purchased in replacement of the component of the main asset that has been damaged. So there's quite a lot of things that we will be calculating, but I just want to highlight the fact that it is mainly focusing on derecognizing the damaged asset. Depreciation is not much of a new thing, is what you already know. Now it says in this question that we have question 1, which in the test that students were writing, it was out of 30 marks, but the mark part is not that much important. What is important is what you learn out of this question. So I will be explaining it in detail so that after this question you have the full understanding on the recognition of the cost of the asset or the cost to be capitalized, and the calculation of depreciation, the derecognition of the damaged component of the asset, as I mentioned before. Then says the Thai Cartage Ltd is a national carrier of fresh produce with a financial year and 31st of December. Now the accounting period is ending in December, and they say due to the high incident of record death, the government introduced a legislation that requires that all long-distance vehicles are to undergo a roadworthiness inspection every 2 years. So now this company will have to make sure that its motor vehicles that are used for the carrier are going through the same process of inspection. Then on the 1st of April, don't forget that the accounting period for this company is ending on the 31st of December. But now we are told that on the 1st of April, which is April, May, June, July up until December, but this is in the middle of the year, the company purchased a new delivery truck on credit from a supplier in Gauteng at a cost of 668,000 excluding VAT. And we don't have to include VAT because the assumption will be that the company is a public company. Then obviously we must not take VAT into consideration. The following significant parts were identified, or the following major components were identified. So this vehicle has major components that their depreciation, their carrying amount, and their cost must be recorded separately because they are significant parts or components of this delivery truck. We have the engine that was purchased at a cost of 350,000, and the estimated residual value for this engine is 52,000 rands. Then we have the main body of this delivery truck, which is worth 220,000 rands. Then we have the estimated residual value for this main body at 30,000 rands, with a useful life of 8 years for this one, and with a useful life of 5 years for the previous component, which is the engine. Then we also have the tires. Obviously the truck will definitely have to have tires, and in this case the tires also are the major component or the major parts or significant parts, with the cost of 98,000 rands. And we know that a truck will definitely have 4 tires, but this is not the main focus of dividing the tires. Another question that I dealt with before, one of the tires of the car was damaged. So now they gave us the cost of each of the tires, which was to divide the cost by 4. and the residual value is estimated to be 10,000 with a useful life of 3 years when it comes to the tires. Then now these are the major components, and I want to highlight them down separately. So that means we can be able to have the price, meaning the purchase price of these components. The purchase price is for all these 4 components, and which is the engine, and we have the main body or the body of the truck. Then we have the tires. Then we are looking at the price of these components. We are looking at their price. The price of the engine is given to us as 350,000 rands, and we have the body, which is 220,000 rands, and if I still remember, the tires are 98,000 rands. Let me just verify that. We have 350,000 rands, which is correct, 220,000 correct, and 98,000 rands for the tires. So now these are the purchase price, the purchase cost of these 4 components, the purchase price. Then there might be another cost to be taken into account. Remember, there was inspection that need to be done every 2 years, which is the road worthy inspection. So we expect that there will be inspection that cost that will be given to us. So inspection will definitely have its own cost separately. But it's not the purchase price. It will be after other costs have been taken into account. Now we read further from the information that we are provided. It says that in addition, Thai Cartage Ltd also paid 6,000 for what? Excluding VAT, take note of that, to have the truck delivered to the premises. So now that means we must have delivery cost. We must have delivery cost, which is transport cost. We call that delivery cost. The delivery cost must be definitely be capitalized to the cost of these components. So now we'll have to add that. How are we supposed to share this delivery cost? The policy of the company is to allocate all additional directly attributed cost incurred to the above 3 significant parts equally. That means evenly. In other words, they sometimes use the word evenly. That means we have to share this 6,000 by 3, meaning equally among the significant components or the major parts, meaning it will be 2,000 for each of them. We are sharing the 6,000 equally, meaning 2,000 each, 2,000 each, and 2,000 each. So now we have added the purchase price and the delivery cost. So let us look now for the other cost that might be incurred. Then it says the first roadworthy inspection was performed on the 1st of May. Remember, this assets was bought on the 1st of April, meaning a month after then we did the roadworthy inspection of 30,000 was the price excluding VAT. The new inspection was consequently ready, the new delivery vehicle was consequently ready for use on that date. Remember, the inspection takes place every 2 years. That means after 2 years, we'll do another inspection. So now that means we have to take into account the fact that there is inspection of 30,000 that took place. So now the cost of the inspection must be recorded separately. Therefore, now when we're recording the total cost to be capitalized, cost to be capitalized, cost to be capitalized. This will be the cost to be capitalized. It will be 352,000 rands for the engine, for the tire 220,000 22,000 rands. Then for the tires, it will be 98,000 plus 200,000. It will give us 100,000 rands as the cost of the tires, 100,000 rands. Then the inspection is 30,000. Then the next inspection will be done after 2 years. So now these are the total cost to be capitalized. So now that means the cost of this will be the sum of all this cost, but we don't have to calculate the total of that because it includes the inspection that is done every year. So now we have accounted for that, but sometimes they do need the total cost to be capitalized. Now including also the roadworthy inspection. Let me just do that numbering. 352,000 plus 222,000 plus 100,000 plus 30,000. This will give us a total of, just recalculate that, 352,000 rands plus 222,000 rands plus 100,000 plus 30,000. It is a total of 704,000 rands. That is the total cost to be capitalized. Then now we have calculated the cost to be capitalized. Then let's read further information. Now after the costs have been calculated to be capitalized, we then have to read the next information. It says on the 31st of December 2012, please don't forget that the new delivery truck was consequently available for use on that same date. Which date? On the 1st of May 2012. And remember, the accounting period is ending in December. The accounting period ends on the 31st of December each and every year. So now if it was ready for use in May, that means it will be May, June, July, August, September, October, November, December. 1, 2, 3, 4, 5, 6, 7, 8. So now that means we must calculate depreciation for all these components for 8 months, meaning in the current accounting period, meaning by the end of December 2012, we only have to calculate depreciation for a period of 8 months. So now I want to calculate the depreciation for 8 months for each of these components, and I will open a page for each of them. We have the engine, and we need to calculate the depreciation of the engine. And the depreciation of the engine will be the cost of 352,000 minus the residual value of the engine, and the residual value of the engine is expected to be 52,000 rands. Then we say minus residual value of 52,000 rands. This will give us what we call the depreciable amount, and the depreciable amount becomes 300,000 rands. Then after we say 300,000 rands, divide this by the useful life of this asset, being the engine, and useful life, it is 5 years. Then if we divide by 5 years, it will give us depreciation for the full year. Then we say 300,000 divide by 5, it gives us 60,000. 60,000 rands is the depreciation for the full year per annum. This is depreciation per annum, but we need it for 8 months. Divide times by 8 over 12. Then we will get into our depreciation only for 8 months times by 8 over 12 months in a year. Then we get 40,000 rands, which is depreciation at 31st of December 2012. This is the engine separately. Then another page, we need the main body of the delivery truck. Main body, Then on the main body, we know that the cost of the main body is 222,000 rands. Remember, our main focus is calculating depreciation. We need not to forget that. Then we say 222,000 rands minus the residual value of this main body. And the residual value of the main body is 30,000 for 8 years expected useful life. So we minus 30,000 rands in order to get to what we call depreciable amount. 222 minus 30, it will give us 192,000 rands. So 192,000 rands is what we call depreciable amount. Don't forget that. Sometimes you can be required to calculate depreciable amount. We need to divide this now by the useful life of 8 years, if I still remember very well. Useful life of the main body, it is 8 years. So now we divide by 8 years in order to get to the depreciation for the full year. It's always very important to first calculate depreciation for the full year. Divide by 8. Divide by 8, we get 24,000. Let me say 192,000. 192,000 divide by 8, we get 24,000. Just want to make sure that you are all clear in terms of the numbers. This is depreciation per annum. We multiply it by 8 over 12 in order to get depreciation only for 8 months in the current year. Divide by 12 times by 8 over 12. Then 24,000 divide by 12 times by 8. It gives us 16,000. This is depreciation at 31st of December 2012, only for 8 months. So now we have calculated depreciation for this asset. Then for the previous one, we got that. Then we go to the third component. The third component, it is the tires. Then we are looking for the depreciation of the tires. Depreciation of the tires, which is the cost of the tires being 100,000 rands minus residual value of the tires. Residual value of the tires, it is expected to be 10,000 rands. Then we say 10,000 rands in order for us to get to the depreciable amount of 90,000 rands. We divide this by the useful life. The useful life of the tires is an estimate of 3 years, estimated to be 3 years, and this will give us depreciation for 90,000 divided by 3, we get to 30,000. So now 30,000 is the depreciation per annum. We are looking for the depreciation only for 8 months. Then we multiply this by 8 over 12. Then we divide by 12, multiply it by 8, we get 2,000. Sorry, we get 20,000. It can't be 2,000. We get 20,000. Depreciation at 31st of December 2012. I hope you still remember why are we using 8. It is because the asset was consequently ready for use on this date. The new delivery truck, remember this delivery truck is made of the engine, made of the main body, made of the tires, and taking into consideration the inspection that must be done. So now it was ready for use on the 31st of May, and the accounting period is ending there with financial year end 31st of December. So now we said May, June, July, August, September, October, November, December, which is that 8 month that I've calculated, the 8 month of depreciation for the year 2012. So now that is why I multiply by 8 over 12. Then the last part, it is the inspection. The inspection, we need depreciation of the inspection, which I want to call it amortization. Amortization. Not necessarily the depreciation, but so far I'm not doing amortization, the intangible assets. but amortization is the depreciation of the intangible assets. So I just want to bring your mind across, because inspection is not tangible. So now we say the cost of the inspection, it is 30,000 and it's done every 2 years, and there's no residual value. We just divide by 2, then we realize that the depreciation or amortization per annum, it will be 15,000. Then we need it only for 8 months. We multiply by 8 over 12. Then we say the 15,000 of the amortization or depreciation for the full year times by 8 over 12, it will give us 10,000. That means we get to the depreciation of 10,000. Now we have calculated depreciation per annum and for the period of 8 months. Then what else do we need when there's a depreciation? We need a carrying amount. Carrying amount, we know that it is cost of 352,000. Now I'm back into the engine. Cost minus accumulated depreciation, which currently it is only 40,000 rands. So now if this is 40,000, then we say 352,000 rands minus 40,000 rands, and this will give us 212,000 rands. What is 212,000 rands? It cannot be 352,000 rands minus 40,000 rands. It is 312,000 rands. 312,000 rands, it is the carrying amount of the engine at 31st of December 2012. This is the carrying amount of the engine. Then we also need the carrying amount of the main body. We need the carrying amount of the main body, which is the cost of 222,000 rands minus the accumulated depreciation up to 31st of December 2012, which is 16,000 rands. Then I will say 222,000 rands minus 16,000 rands. This will give us a total of 206,000 rands. 206,000 rands. This is the carrying amount at 31st of December 2012. Then we go to the tires, and we are looking for the carrying amount again. Carrying amount is the cost of the asset, and the cost of this asset is 100,000 minus the 20,000 of the depreciation only for 8 months. Then I will say minus that, it will give us the carrying amount as a lousy 80,000 rands, and again carrying amount at 31st of December in the year 2012. Then we go to the inspection, which is the intangible part. Then we are looking again for the carrying amount. The carrying amount is the cost, and the cost of the inspection is 30,000 minus the accumulated depreciation up to date, which is 10,000. That means we get to the 20,000 rands as the carrying amount. Now that this is done, I need to go back to my main page where I have my asset as the delivery truck. So now we are looking for what? We are looking for now what to call the carrying amount of the truck. Carrying amount of the truck will be the carrying amount of each of these components. We are looking for the carrying amount of the engine plus carrying amount of the main body plus carrying amount of the tires plus carrying amount of the inspection will give us the carrying amount of this asset. I hope you are very clear with that one. Let me go back and scroll back. So now I'll be adding all these figures separately. So now we have this carrying amount 312,000. It will be 312,000 plus 206,000, if I still remember. Yes, plus 206,000. 206,000 plus 90,000, if I'm correct, or plus 80,000. We plus 80,000 plus 80,000, then plus 20,000, which is the inspection that is having a carrying amount of only 80,000. There we have it as 80,000. Carrying amount of the inspection, it is, 20,000. So that will be the carrying amount of the inspection being 20,000. 80,000 was that of the tires, which we have captured it already. So now those will be the cost that we are taking into account as our carrying amount. Everything's already been there. Then we get our one carrying amount, 312,000 plus 206,000 plus 80,000 for the tires plus 20,000 for the inspection. We get 618,000 rands. This is the carrying amount of what? Of the delivery truck. This is the carrying amount of the truck. Be mindful of that. Carrying amount of the truck is 618,000. And this is carrying amount at 31st of December 2012. So now at this time, there is normally a recoverable amount to test for the impairment. So now we can do that testing of the impairment. But let us check if are we required or are we given any recoverable amount or not. And it is at this point that I ended when they said on 31st of December, because the reason why I stopped here is because 31st of December, it is the last day of the year. So now whenever you go up to the end of the year, there is a likelihood for the testing of the impairment. And in this case, before December, there is no component that has been damaged. So now if there is no damage up until end of the year and they say on 31st of December, it is very likely that they will say 31st of December of the current year, the estimated recoverable amount of the truck is how much? 588,000. So now that means there is a recoverable amount. So now what do? We say recoverable amount vice versa the carrying amount of this asset, 588,000 rands. We can see that the recoverable amount is more than the carrying amount. So now that means if that is the case, we will get to the difference, which will be the impairment loss, 588,000 rands. Now we get to say 618,000 rands minus 588,000. We get to an amount of 30,000. 30,000 rands becomes the impairment loss. This is the impairment loss. Impairment loss at the end of the year, not the impairment loss because the asset was damaged. Impairment loss at the end of the year, when we do the testing of the impairment loss, we discover that the carrying amount of this asset is more than the carrying amount of the, or is more than the recoverable amount. Therefore, the difference becomes the impairment loss. So now we have captured that. Let us listen to the next information. Remember, I'm not yet focusing on the requirements because I know as I'm doing these calculations, I am covering some of the requirements in terms of the numbers. Now it's going to be responding exactly to what is required after I'm done. Management decided that if any impairment should be recorded at December, that the full amount should be allocated to the main body of the delivery truck. So now they say there must be some of impairment that must be tested end of the year. So now we'll check. We have tested that there is impairment, which will be recorded to the main body. Then let's continue now and read the next information. Next information says to us that on 28 February 2013, remember previously we ended 31st of December 2012. Then we started another year, 1st of January 2013. We started this year. It was January, February. 2 months down the line, at the end of February, the engine of the truck seized as it was irreparably damaged. So now there's a damage 2 months in the beginning of the year. Now we need to calculate depreciation for January up until February, because depreciation has been calculated only up until 31st of December when it comes to the engine, because our engine depreciation is only up until end of December 2012. So we need to account for January plus February in terms of the calculation of the depreciation. Up to the date this engine was damaged. So this engine was damaged, and the damaged engine was sold for how much? For 42,000 rands cash. Now immediately, if you received money from the sale of the damaged asset or major component of the asset, then you make sure that you say carrying amount up to the date of the damage minus the amount that was received on the sale. The difference becomes the impairment. And they say that this was to a local scrap dealer that we received 42,000 rands. Now, even before I continue further, because I know that they will tell me about the new cost of the new engine that was bought in replacement of the one that was damaged. So now let me calculate my depreciation only for 3 months, 2 months in fact, depreciation for the engine, the damaged engine. So now I must go back to my engine information. Then I say under my engine information, I must calculate now the depreciation only for 2 months. Then again I go to my depreciation calculation. Then I say depreciation. I don't have to say cost minus residual value, because I already have the depreciation of 60,000 for the full year. Then I say depreciation for the full year. I am looking for the depreciation for 2 months from you. I don't want all of you. So now I say 60,000 times by 2 over 12. Then it gives me 10,000, because out of the depreciation of the full year, I only need the one for 2 months. So now I got my depreciation up to the date the asset was damaged. Now that means I can say now what is the carrying amount at the date of the damage. Carrying amount at 28 of the second month, which is February 2013. That's what I'm looking for. My carrying amount will be the cost of 352,000. Cost of 352,000 minus the depreciation of the previous 8 month of 40,000 minus the depreciation of the current month of 10,000. Then this will give me the carrying amount up to the date the asset was damaged. Then what do? I say 312,000 minus 10,000. I hope you understand me on that. It will be 302,000. I just took the carrying amount after 40,000 was deducted. Then all that I deducted was only the 10,000, which is the same as saying 352,000 minus 40,000, which gives you 312,000 minus 10,000, which gives us 302,000. So now this is the carrying amount up to the date this asset was damaged. Then the question is, did we receive any money? Because this carrying amount is the value of the asset at the date it was damaged. This was the value in our books. So now the question is again, did we receive any money on the sale of this engine? The answer is yes, money was received. How much was received? We received 42,000. Then we say bank. We minus our bank of 42,000 rands. Then the remainder becomes the impairment loss. Then you say 302,000 rands minus 42,000 rands. Then I will say 260,000 rands then becomes the impairment loss. We have 260,000, which is the impairment loss. 260,000 rands, which is the impairment loss of the date the asset was damaged. Then we have our impairment loss. We have our impairment loss. So this is the impairment loss of 260,000 on the date the asset was damaged and after we have sold it. So now let us read further information on that and see what we have. It says this new engine is expected to have a useful life of 5 years and an estimated residual value of 80,000. Now, we'll capture that is not much of a transmesh, but we need to know that it was bought on 28 February, meaning the depreciation now for the new engine will be from March, April up until end of the year, meaning the depreciation for 2013 will be for 9 months when it comes to the new engine. Now, let us read what is required. Now, we are required to calculate the total capitalized cost for each of the significant part of the truck. We have done that one already. Let me just go and label it. There we have done it. We have done it. So we have calculated the cost to be capitalized. So that means this will be question number 1.1. So this is 1.1. Then let's look at the second requirement. Second requirement says calculate the depreciation per annum for each of the significant parts of the truck. We have done the depreciation per annum for the full year. This was the depreciation for the engine for the full year. I did say PA, there we do have depreciation for the full year. There we do have depreciation for the main body for the full year. I said per annum 24,000. There we do have depreciation of 30,000 of the tires per annum. Then we do have depreciation of 10,000 of the inspection. So we have calculated again the depreciations. Remember, we are just doing the calculation. Sometimes you'll be given a table where you must just paste these numbers in the table. So that will not be a transmeshed, because this becomes the column. That's where you'll be recording the 10,000. And this becomes the column called tires, and this becomes the column called main body, and this becomes the column called engine. But I just want to do it in the rough draft of doing the workings as we are instructed. Then in the case where you have a table, then you copy these numbers into the table that is provided to you as the answer sheet. So now we have done the depreciations for the full year. Then the one for the inspection, it is 15,000. Then for the number of months is only 10,000. I'm just noting it now. This is at 31st of December 2012. So we have responded now to the second requirement, which is out of 4 marks. Then we are required to calculate the depreciation for each of the significant parts for the significant parts of the truck for the year ended, meaning now we have to calculate depreciation only for that 8 months. Those are the 8 months in the year 2012. We have done that one already. You just now highlight that this was 1.2, this was 1.2, and this was 1.2, and this was 1.2. Then now we go to 1.3, and this is the depreciation end of December 2012. This is 1.3. This is in response to 1.3, and this is in response to 1.3, the 20,000, 1.3, and inspection, this is 1.3. So all the numbers are there, 10,000. Again, if information is to be pasted on the table, please do paste it on the table as it's supposed to be. You just write depreciation end of this year, then you paste the numbers in the table. You don't have to show the calculation. You just take these numbers, you paste them in their respective column where they're supposed to be. So there's no transmesh on that one. Now we come to the next calculation, or the next requirement, which is calculate the carrying amount of each of the significant parts of the truck end of December. Okay, we calculate the carrying amount, or we are calculating now what the carrying amount for each of the parts. We have done that one again. Carrying amount, which is 1.4. There is the carrying amount. So this is the answer for 1.4 when it comes to the inspection. This is the carrying amount for the tires which is 1.4 answer is there, and we come to the carrying amount of 206,000, 1.4 answer is there. Then we come to the tires. The answer for the tires there is 1.4, and we're just numbering now. Numbering very easy, straightforward. Now we have pasted all the figures. We have the figures where they're supposed to be pasted. So carrying amount again for all the significant parts has been done. Then now we are done with the carrying amount also. We're done with that one. We're done with this. We're done with that one also. Then now we come to 1.5. Calculate whether it is necessary to impair the truck at the end of December 2012. We are required to calculate whether the impairment is necessary. Impairment, yes, it is necessary. Why am I saying so? It is because we do have the impairment. So that means this is our 1.5. This is our 1.5. 1.5 answer is here at the bottom. This is 1.5 below. There we do have the impairment, or you can specifically write there under the impairment and say 1.5. This is 1.5, the exact answer for 1.5. Yes, we tested and we discovered that there should be impairment, and we calculated the impairment as 30,000 rands. So 1.5 is done. Then after we go to 1.6, which is the last requirement. Provide the general entries for the derecognition of the damaged engine and the acquisition of the new engine at the end of December 2013. We are focusing only on the damaged asset. Now we have to say we are providing general entries for which year? For the year ended 28 of February 2013. Or from the engine that was acquired at this date. I'm surprised now because the accounting period is ending there. Now we are to provide general entries to derecognize the engine and the acquisition of the new engine end of February. Okay, we don't go to the end of the year. It's only at the end of February, meaning depreciation for the current year. We don't have to provide a general entry for that. It's not part of the requirements because depreciation will be recognized at the end of the year for the new one, but for the old one, we need to account for that one. So now we need to do general entries that we are required to do. And the numbers, again, they are already there. The numbers are already there. I want to go to the engine page. The numbers are already there. No, there won't be enough space. The numbers are already there. Then this is 1.6. We debit our depreciation. And our depreciation was 10,000 for January and February for the engine, for the damaged engine. If you remember that one, let us go there and verify. Engine depreciation for the 2 months, if you remember, January and February, it came to 10,000. So this is the one that we are recording because it is up to 28 of February. So okay, this was very much at the bottom. We have 1.6, and in 1.6 we debit our depreciation by 10,000 rands. We credit our accumulated depreciation. Then we have our delivery truck, and our focus is on the engine, which is 10,000 rands. So that is captured. Then now we are to derecognize this asset. When we derecognize, we debit. Or first of all, we need to recognize impairment. Please don't forget that one. We first need to acknowledge the impairment. Impairment loss of 260,000. Then we credit accumulated depreciation. accumulated depreciation plus impairment loss on the engine, truck engine, don't forget that, 260,000. Where is this 260,000 coming from? Remember, the engine had a value. If you are still aware, the engine had a carrying amount at the date it was damaged, a carrying amount of 302,000. This was the value of this engine at the date it was damaged, which is 28th of February 2013. The carrying amount was that amount, but we only received, when we sold it, we received only 42,000. So now, meaning this amount becomes the loss. Why that is the loss? Because we sold this engine at a price lower than its carrying amount, so we are making a loss. In other words, this will be, in inverted commas, asset loss on disposal of the asset. So this becomes the impairment loss, that 260,000. Make sure that you recognize that. And once again, if we did not receive any money for the sale of this asset, we just throw it because there was no one that was willing to pay a cent for that. That will mean now the whole 302,000 will become impairment loss. But you always reduce the carrying amount by the amount received on the sale of the asset, then the difference becomes the impairment loss. So that is where that 260,000 is coming from. So now we have captured that impairment loss. Then after we do the derecognition now. Derecognition now is the part that I'm recording. We debit accumulated depreciation plus impairment loss, meaning and impairment loss, then the accumulated depreciation and impairment loss is the total accumulated depreciation. In other words, let me just simplify it to you. The accumulated depreciation will be the cost of the asset, 352,000, minus the amount that was received from the sale of this asset. It is 310,000. I will tell you where that amount is coming from. 310,000. That's the amount that I need to calculate. What do? You say the cost of this asset, 352,000, minus cash received. Even if it was not cash, we gave to the creditor, and the creditor granted us an amount of such and such, granted us a credit of this amount. Sometimes they will say that if we did not receive cash, they will say the creditor granted us this amount, meaning the value of that asset. We say the cost of the asset minus the credit that was granted by the supplier, or the cash received on the sale of this asset, or whatever amount we sold it for, whatever value it was. The difference is the amount of the accumulated depreciation plus impairment loss. Then after we acknowledge the bank that we received 42,000, or the credit that was granted, then now let me prove where this amount is coming from. This amount will be your depreciation of 40,000 in year 1, plus the depreciation of 10,000 for 2 months, plus the impairment loss of 260,000. These three amounts, they will definitely give us the 310,000, meaning it will be 40,000 plus 10,000 plus 260,000. That is 310,000. But easy cost minus the cash received, or the sale amount of the damaged asset. Then after we say now delivery truck, engine cost. How much is the engine cost? 352,000. And again, the 310,000 plus 42,000 must give us 352,000. Derecognition, guys, general entry is a giveaway. You must always make sure that you grab this marks. It's a giveaway. It might look tricky or sound tricky when you don't get somebody who will explain it very well to you. but honestly these are just giveaway marks that you need to make sure that you collect them as much as you can. So we have provided the general interest to de-recognize the damaged engine. So now we are acquiring the new engine. The new engine, was it bought for cash? Let us look at the new engine bought on credit for 380,000. So now it was bought on credit. If it was bought on credit, then what do? We still debit our delivery truck, which is new engine, costing 380,000 rands, and we credit our creditor. Who is the name of the creditor? On credit, we are not exactly told who is the name of the creditor we bought this new engine from. So we can just say creditor or trade and other payables, or trade payables. 380,000 rands is the correct amount. So now we have recognized the new engine. Now I just want to bring your attention to other areas that can be asked in the exam with regard to this type of the question. Now, when you are required to record this transaction, the last one, this transaction at the end of the year, if this was not specifically this date, or they said also provide some of the transaction at the 31st of December 2012, sometimes you can be required to do so. That means you must account for the depreciation for each of the components for the full year. When I'm saying each, I'm referring to the main body depreciation for the full year. You record the depreciation, then after the inspection depreciation for the full year, and which other component, and this new engine for 9 months, because the new engine was in the business for 9 months. So depreciation by December for this new engine, it will be for 9 months, where we are counting from March. It will be March, April, May, June, July, August, September, October, November. Also it will be 10 months in fact, not 9 months. I think I said 9 previously. So it is 10 months upwards. So depreciation will be for 10 months for the new engine, the current year. Then you record the depreciation for that, where the question requires you to do so. With that, guys, you've been lovely audience. I have clarified as much as I planned or intended to do so. This question, a very popular question in the property plant and equipment. In fact, this is the gist or the main menu for this topic. So guys, God be with you. Pass your exam very well. Thank you.